everyone, good morning and welcome to today's morning report on Tuesday the 13th of June with me, Richard Perry, market analyst at Handtech Markets. We have a relatively positive market outlook at the open today. Some decent moves that we've seen at the open. Let me show you how markets are opening, or trading at least, in the fact that we've got the euro higher, sterling higher, yen weaker, equity markets all higher, gold lower, and all the commodity currencies all higher as well. So that all pretty much tells you that the markets are fairly risk positive today. This move on the sterling is interesting because you had a meeting last night of Conservative MPs with Theresa May, and it suggested that it was created a little bit of stability amongst all the perceived chaos that we've had since this since the UK election result last Friday. Theresa May sort of appeasing some of the backbench MPs, and that's has seemingly helped to support sterling today. Also, sterling has been helped by a very strong, or very much higher than expected, UK inflation reading. UK inflation coming in well ahead of expectations on the core, and also the headline jumping to 2.9% from 2.7, the core jumping to 2.6 from 2.4. That was both of those readings well ahead of expectations, and that should help to again sort of keep a floor under sterling to a certain extent. But sterling remains under pressure, I think, in the medium term, in the fact that the market is still sort of unsure as exactly how this UK election will affect the political environment in the UK going forward. So I think that's a reason why sterling could well still remain under a bit of pressure, certainly. But in terms of what we're looking out for today, we've got a sort of negative move marginally on the dollar, and that's come with all these sort of risk positive moves that we've seen today, and that comes despite the fact that treasury yields are higher. And again, treasury yields higher or flat to higher again suggests that the mood is risk positive, and that comes despite the fact that we actually had a bit of a decline on Wall Street last night, and that decline on Wall Street is coming on the back of the tech stocks, which are under a bit of pressure near term. But yeah, I think it's still likely to be a near-term move that gets bought into on Wall Street, but still worth keeping an eye on nonetheless. Now, in terms of what we've got to look forward to today, well, we've got UK inflation. We've just had that at 9:30. Then you're looking at German ZEW and US producer prices index, which is factory gate inflation. So German ZEW expected to sort of maintain around about that sort of 2021 area. It's pretty positive. That suggests still some decent business environment in Germany. And then PPI inflation, which is expected in the US to sort of dip marginally back to 2.3 on the headline. So again, that sort of doesn't really overly help this sort of air of or sort of this recent sort of decline in inflation in the US, and that has sort of been met with treasury yields falling away. So it is still a concern, and that comes in ahead of the Fed, and that will be an interesting reading that the Fed will have to digest today. My chart of the day is the euro yen. Now this has been a chart I've been looking at for a while, several weeks actually, talking about the prospect of this turning into a big top pattern. I sort of have been saying that if you started to see closing levels below 23.30, which 23.30 to 24.10, look at these sort of key highs that we had. Sort of zoom out one more. Key highs that we had sort of December, January, February time, 23.30 to 24.10. They sort of became a base of support, but then you've started to subsequently see this 23.30 level breaking fairly consistently on a daily basis, and that yesterday culminated in a close below 23.10 for the first 23.30 for the first time pretty much since early May, and the first time that has closed in a negative move, certainly. And it all suggests that the pressure is building on this top pattern. That supporter at 22.55 that we saw from that mid-May low came under pressure, held last week, but again, sort of seemingly coming under pressure. We've had a bit of a rally today, but it certainly looks as though rallies are getting sort of increasingly sold into. You've got this sort of outlook on the hourly chart whereby it's sort of consolidating, yes, over the last few days, but pressure is growing to the downside, and you've seen this sort of resistance coming in around the sort of 23.75 to 24 figure area, and again today 23.75 pretty much to the pip, coming in as resistance. And if that sort of maintains as today's high and the market falls away again, I think that is again sort of playing into this whole theme of recently sort of putting pressure onto the downside. Now, close below 22.55 would complete this top pattern, give you sort of 300 odd ticks to the downside if that completes, but certainly the momentum indicators are still correctively configured, the RSI falling away on a sort of consistent basis, MACD lines and stochastics as well, so it is putting pressure on that support, but you'd need to see a closing breach of that, and a consistent closing breach is below 23.30 would sort of add that pressure on, but 22.55 is your key support. Now, in terms of resistance on the upside, 24 figure area, as I said, seems to be in the last week or so becoming that basis of resistance, and that is again underneath that 24.10 old key high. So I wish you good luck in your trade today, and I'll speak to you later. Thank you.